Welcome back to the channel. My name is Brad, and today we're going to look at AIPI and FEPI. See where they are, see where their calls are, and what we can expect over maybe the next couple of weeks, depending how the market reacts. If that's what you're looking for, stick around. So, FEPI and AIPI. First of all, let's talk about what they're actually paying. FEPI is a very consistent payer. I'm bringing up the chart showing you that they pay $1.16 to $1.08, but they're very consistent, slightly over $1. Now, if we look at AIPI, they pay slightly more. They're paying right around that $1.50, $1.49 mark. So you can kind of count on that on a monthly basis. And that's important because having variations in income kind of hurts when you're trying to actually live off of it. So here's two that have very consistent returns. If I look at a price chart, FEPI is right around even if you take it all the way back to the beginning. But keep in mind, one of the biggest problems FEPI has had in their fight is Intel. Intel is one of their holdings, and Intel took a very big dip, and they've been struggling to get back. But who knows, maybe Intel will turn the corner. Somebody's got to make those chips, but we'll figure that out one day, and maybe, or maybe not, Intel will be left in there, but that's the one that caused the biggest dip. If I look at AIPI, they recover. And one thing that should be discussed in this, why are they recovering? These are covered calls, and do they always recover? Maybe, maybe not, and that is totally market dependent. But one thing that people should realize is they rate their calls approximately 5%, depending on volatility. They could be actually higher than 5% out of the money to allow growth to happen during the month. They normally rate these on monthly calls, and they're approximately 2 weeks out from having to roll on the 17th. If I look at the holdings of FEPI, they have changed. Qualcomm is no longer one of their holdings. PLTR has replaced it. And that was one of the interesting things that I noticed when I started looking at their holdings and what's going on with their calls. If I look at AIPI, and one thing I should note is AIPI is not evenly weighted, where FEPI is evenly weighted. Just how they do things at the fund level. But AIPI has had no difference in what they actually have in the holdings. They're all the same, and they include Qualcomm. Now, let's take a quick look at where they are on their strikes. We still have a couple weeks to go, so can we expect any upside movement? So if I look at FEPI, the first thing I notice is only one of those strikes on AMD on this sheet is capped. Everything else still has upside movement. Please also note that they have more than just one call currently on any one of the stocks. Looking at the next section, there is two that have been capped, but we still have a very big section of calls that have not been capped, so we can still get appreciation. And the last one, they have a bunch of capped stocks that have gone up in price and have gotten capped out. So they won't see any more NVIDIA, but PLTR, they still have strikes above the current price. Tesla, they have one that's capped, but they have one that's not capped. So take it as they're still going to get you your 24%. They have some capped, some not capped, so we can still have capital appreciation between now and the time that they have to roll the calls. Looking at the same thing for AIPI, well, they have a couple of them that are capped, And they have a couple of them that are not capped. But ARM is definitely capped and AVGO is definitely capped. Nothing you can do about that, but at least they're still going to get you that higher percentage. But looking at the rest of the sheet, Apple is not, Adobe is not. But we still have other calls. And also, again, notice that they have more than one call on any particular stock. They stagger them and have different strike prices. Looking at the next sheet, hey, they don't have as many actually capped. They still have room to appreciate. So that is a good sign that they still have room to grow on certain stocks. And we're going to just take it because, you know, if we get more movement on Google or Cisco Systems, we will capture more of the upside. So right now, MU is totally capped. And you can say the same thing for NVIDIA. But Meta is not. Now is not. So we still have room to grow on those particular stocks on AIPI. Lastly, it looks like we have a couple of these. SMCI is right now capped, but everything else is only partially capped, and we still have upside movement and upside movement potential. So hopefully this explains everything that is currently going on at AIPI and FEPI, just as a quick update of their calls, where they are, can we continue to see movement, and can we still achieve upside for the rest of the month. Right now, yes, upside is currently still allowed, but how much more upside can we get? Don't know. But at least we know that we're going to get those percentages paid out to us because they're pretty good about getting us the exact percentage or thereabouts every single month. Hopefully this brings you value today, and please feel free to hit the like button and subscribe. Until next time, God bless.